The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. We're going to start the show today by looking at the gold and silver index because we are retesting. We've actually taken it out by just a little bit, the low from April 19th at the 786 level. That corresponds to what happened in the gold market last night. We got down. We were looking for the S&P. We were looking for the gold market to get down to that 1383 level. We made a fast move down to 1373, and we spent most of the day above that 1383 level now. So we are at the moment of truth now in the gold market, in both the gold. Silver is broken down so much that it's really going to be hard to turn it, but it can move quickly, so it still has a chance. But gold must hold this low that we had today, this 1373 low, because if it doesn't, that's telling us we're heading to either the 1350 or somewhere in the 1100 range if we break really, really badly. The gold-silver index did not rally very much from April 19th, where we got a $160 rally in gold. The gold-silver index barely moved, just like it did when it hit the 61% retracement. So that's another negative sign. There's a lot of selling coming into this market, and it's even more pronounced when you think how bullish stocks have been, and yet the gold mining stocks and the silver mining stocks are the weak sisters in the bunch, and they haven't really done very much. They still have a chance. They're hanging on by the hair of their little chin, but it's going to be interesting to see, what happens at this point. Gold is down, I think, around $10 or so today. How much is it down? It's down about $8 right now, and it could very easily reverse, but, it's very important, that number that we hit this morning at this $1,383 an ounce in gold. I'll post the gold chart into Tiger TV in just a little bit, but I wanted to show one other chart before I do that. On a side note, on yesterday's show we talked about Apple, the 61% retracement of the move from 385 up to 465. The 61% retracement back came in at around 416, and the low today in Apple was 418, and it's rallied about $20, almost $20 a share since that time. So that also should be, a key place to look at it. The next chart that I wanted to share with you in the in the chat room. Yeah, do we have a Tiger's chat room? And we certainly do. But the one I wanted to show into Tiger TV is what I think is a very, very important one for several reasons. I'm going to put the gold bug index, the HUI, into the room, and it shows here again we're also setting at the 786 retracement. As you can see, we had very, very small rally in that after we hit it on April the 19th, and now we're below that level already, which is a negative sign. But the most important thing that I think that you should really pay attention to is the period between July and September of 2011. If you'll notice that the gold bug index made a perfect reverse point wave where you had wave 1, wave 2, wave 3, wave 4, wave 5, and the 135 pattern fulfills it up there with a 3 drive to a top pattern. And folks, that is the same pattern that we are looking at in the Dow Jones Industrial Average, same pattern in the New York Stock Exchange Index, same pattern in the NASDAQ, same pattern in the FTSE, the same pattern in the DAX, same pattern in the CAC Cahoon in France. And let me tell you, there's some real ominous stuff happening out there. I don't know what's going to happen, but I don't know. I don't know if it's related to the point that Bernanke as not going to Jackson Hole, Wyoming. He said he had a scheduling problem. Folks, that is a flat-out lie any way you want to look at it. Those are booked years in advance, and I don't know what's going on. All I'm suggesting is there is a possum out there, and someone is not telling the truth. I don't know what it's regarding, but I hope they don't pull a Brenton Woods agreement again where they do something crazy, and who knows what they're planning. I mean, this is a whole big experiment, and frankly, I think it's going to blow up in their face, but, I don't know anything about economics, so I'm just telling you what I see in the charts. You got to be real careful up in here. This is a very ominous sign that we have looking at all these charts. Now, there's a chance that all of these patterns could fail, but right now I'm beginning to think that it looks more and more interesting that they are probably going to have something really dramatic happen here very quickly. And it could be related to him not going to Jackson Hole. But for him to say that there was a scheduling problem, that's a total crock of baloney, folks. That's not true. They'll have to sit down and let me see the memo before I would ever believe, anything like that. That's how strongly I feel about that particular thing. I wanted to bring up the gold and the silver chart together, like we usually do here in the Commodity Hour. We can look at them together on the 60-minute chart because we go back for several months with this, and we're able to see where we are. And I'll put that into Tiger TV, and you'll be able to see we've had a pretty good run in silver off of the bottom. It's moved 50 cents an ounce, but as you can see, there's been a great deal of damage done in the silver market. We have taken out the lows from the April 19th by a great deal, whereas we're only at the 61% retracement in the gold market. Now, that could have positive ramifications. We will know if the gold can reverse from here and have a chance, to run to the upside. Then there would be a possibility that this is a major, bottom of, some strength anyway. We'll see. But, silver is incredibly weak. The fact that it was able to rally back 50 cents is a little bit, but it's still way too early in the day. And the fact that it broke the lows from April the 15th is really a bad sign. We got a call from our friend Danny in Atlanta. Hi, Danny. How are you?
I'm doing great. How about you?
I'm good. It's good to talk to you, my friend. What can I do for you?
Last night, I was looking for the 786 retracement in gold, and we made a 707 retracement. So I'm not long yet, but would you be looking for that 786, or would you try to buy a retracement from here to the 707?
Well, I'll tell you what, Danny, I don't use 707 very often. I don't see it. Gold has been hitting, the 618s, very, very nicely on the way up and on the way down. And we did have a fast move down to that number last night. And the good part is that it came right back above it, which tells us that, it has a chance, to hold from this level. But it's really, it's got to get moving. So if gold could close really strong today, be up like, $8 or $9, something like that, then I would say there's a really good chance that, the major bottom is put in. It's got all the characteristics of a major bottom for sure. The thing is that we've had such a bearish part of silver, which is, more of an industrial metal than anything else. So, but it has held a really important number. I'm going to put that into Tiger TV, so the folks can see it. And the fact that it's rallied nicely today, it's rallied a good, $15, $16, which is not very much in gold, but it gives it a lot of volatility. And so that's what it looks like to me. But I'm really hard to be bullish gold right here, Danny, because of what's happening in the gold and silver index and also in the gold bug index. Those broke out. They took out the lows of April the 19th, or the 15th. That's when gold went down to 13.22. So I have to be bearish. I would rather, in other words, it's going to have to rally and pull back before it makes me a believer.
So, nice webinar last night, by the way. And you said you were looking to get long last night. Did you get long?
Yeah, I got long for about 10 minutes.
Oh, okay.
Yeah, I bought it at my alert went off about 1 o'clock in the morning, right around the London Open, and it dropped really fast, and I used an $8 stop, and so I was out of it, and I was tired, so I went back to sleep, and I didn't catch any of the rally back, and so I really didn't do it. My big trades overnight were long the euro and long the Australian dollar, and short the yen versus the dollar, and those really worked out pretty well. But I did lose in the gold, but I'll look at it again. I'm doing what you're doing. I'm sort of watching to see, if this is going to close pretty good today. Because if it doesn't, that means we're setting up, at 1355, which is the 786, and then we'll take a look at that. But we went up, stopped right where we should have at $1,480 per ounce, and now we're backing off, and this could be the last buying opportunity. I was surprised that it went through there so quickly last night, and that's just the way it goes. I wasn't in that trade more than 10 minutes.
Well, you win some, you lose some. You got to win more than you lose, I suppose.
Oh, that's true. You got to kiss a few frogs before you find the princess, my friend. No question about it. But we are at a critical point. There's no ifs, ands, or buts, in my opinion, because of the fact that this, gold index is breaking down, and the gold bug index is breaking down. This has some pretty negative implications if it continues down that way.
Okay.
Thank you, my friend. And
Thank you,
are the
Larry.
cherry blossoms in bloom down in Atlanta?
Yeah, the pollen's already on the ground. So.
Oh yeah, it's a beautiful time of the year there for sure.
Yep.
Okay, thanks for calling in, Danny.
Thank you.
You bet. Okay, folks, I'm going to post into Tiger TV the long-term chart on the gold market that goes back to 2009, and it shows the very large AB equals CD pattern that stopped right near the 618 and the 50% level from 2009, and then we had the $160 rally, and this is the pullback. It's either the pullback to buy, or it's going to fail and head down to either 1355 or below. So my assumption here is just to wait a little bit to see if that level is going to hold or not. It'll give you plenty of chances to buy it because the gold-silver index and the gold bug index look so bearish that it's very difficult. Now, if they turn and they get strong, the gold-silver index and the gold bug index turn today or tomorrow, Monday at the latest, and start to reverse back with a little bit of gusto and maybe some, a little bit of volume, then something's up, and you could buy those things. You could buy the gold-silver index and the Philly index, and then have something to work with. We've got to take a break here, folks. 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, folks, I posted into Tiger TV a long-term chart on gold that goes all the way back to the 1700s, the foundation of our country, and then it covers the time that Roosevelt took us off of the, busted the gold standard, and we couldn't hold gold. That was released in 1972, and that shows the big move, that we've had, during that time. So this shows you that there's been a long-term bullishness, in the gold market. This last correction that we had was one of the first big ABCD corrections we've had in a long time, much like we had with Apple. When it came down to the 385 per share. So that's really, all that you're looking at. So on a long-term basis, gold still is, extremely, extremely bullish, and it hasn't come off the high by very much. It has gone to the, 50% retracement off of the high that we made back in September of last year when we hit $1,932 per ounce. We have a disaster here in Tucson, Arizona right now, as my computer has totally frozen up, and I am out. I just hope that it comes back on in just a second. Otherwise, I'm in deep trouble. What I'll have to do is I will have to reboot during the break, and then we will, have charts after the break. But right now, I'm just going to have to fill up. I could tell some funny stories, but I don't want to do that. I want to stick with the market thing. The corn, beans, and wheat are still in consolidation patterns. They're getting ready to come down and give us the buy we've been waiting for. We're at the middle of the May now. I talked to two of my corn planting friends back in Indiana over the weekend. Over last night, not over the weekend. But they don't even have corn planted in some parts of southern Indiana, down where Dr. Miller's farms are. And she's got over 1,000 acres. And they still don't have corn in the fields there because it's been so wet. So that means the corn plantings are going to be late, and that means that there's more susceptibility to crop problems. And we always have a crop failure at least once a year. So that's what we'll be watching. Last year in May, we were looking for a major bottom to form, and we had the big drought that came on. Next week, we'll have Rich Anderson on as our guest from Anderson Capital Management, and we'll be able to, do that. This computer is totally frozen, so what I'm going to have to do is, as I'm talking, and this is going to be a real choice thing to do because the Italians can't do two things at once. I'm going to try to reboot this thing and get charts, but we will get it up and running. Boy, that doesn't even work. I have a real serious problem here. So we'll ad-lib until we get to the point where we're at the break, and then I'll be able to reboot everything, and then we should have a pretty good chance. Oh, that takes me out of the chat room for TFNN. I hope that doesn't affect anything. I really don't know, but I have got a major problem here. I think I had a power surge because my generators are both on, and that's telling me that there's something really seriously wrong here. So I'm going to do this while I'm waiting for this to happen. I know we've got a break coming up at the half hour. Unfortunately, I can't see anything. I'm blind right now, and I will try to get this thing up and running. But boy, I've had a real crash. I don't know what's occurring, but hopefully I'll get it up and running here soon when we come back from the break. So I'm not able to see anything right now. I'm totally blind. I have black computers, two 42-inch black screens, and that's it. So if TFNN is listening, Al, would you let me know what's happening because I don't know when the break is, and I'm trying to get this thing up and running. And my generator has booted on, and I don't know if we've had an electrical storm here in Tucson or not, but we'll see what happens, and we'll go from there. I'm assuming that we're on the break now, so that we'll see if that's the case. This is the first time this has happened, which is not bad after all these days of doing this. I guess it's not too bad. So we will find out what's going on. Okay, I don't know what to do next, but to wait and see what goes on next. That's all I can do. Could sing a little Dean Martin stuff, I guess. I don't hear the news coming on for the break, so there it is.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, good afternoon, folks. I think I have this minor disaster fixed. I've got two generators, and they both came on, and I didn't see anything happen in the house with air conditioning or lights flashing or anything. It just took out the computers, I guess. Who knows? Anyway, we have a caller from my wife's hometown of Toronto, Canada. Are you there, Michael?
Yes, I'm there.
What can I do for you, my friend?
I want to talk about crude oil.
Okay, let me post a chart into the room here, and we will take a look and see if we can see what's happening with crude oil. It's,
I wanted to ask you something. I think on Wednesday's segment you talked about the VIX and how it was making higher lows.
Yeah.
And I was wondering, do you have any studies on the OVX, which is the Oil Volatility Index?
Wow. I didn't even know they had anything like that. You know, I really didn't know.
It's $ OVX.
I didn't really, I don't know what that, say what it is again, what?
OVX.
OVX, wow.
Yeah, Oil Volatility. It's the CME Oil Volatility Index.
Is there any trading that goes on in it?
No, I don't think so.
Well, that's why I don't look at it then. Stuff like that is just really difficult because if you don't have liquidity, it's just not really giving you a good indication of anything, Michael. That really is. And crude oil is such a great thing to trade. I mean, it's really the best thing to trade. Yesterday on the big sell-off, it stopped right at the 786 retracement of the past week's range, down at the 92, and now we're coming back strong. If we can close above 97, in the June crude oil. I think we're going to see, probably 105, maybe even 110 this summer in the crude oil, because there's a lot of resistance in that down-sloping line that we have going back to February. Each of those highs have been lower, and that's a very negative thing. But if it gets above it, then you're looking at something, pretty bullish. But it's got to get above it in order to, to make it work.
So the line in the sand is $97?
Yes, sir. If you'll take a look at the chart that's in Tiger TV, you'll see a dark maroon line. I drew that in the special really dark color because it's hit it 1, 2, 3, 4 times since January. It's a down-sloping line, which means the trend longer term is down. We've had lower bottoms. We had a lower bottom in February. We had a lower bottom in April, and we've had lower tops since that time. So it has a negative bias in crude oil. But going above 97, then you've started a catapult that could take it to at minimum. The first objective is 105 and possibly even 110.
Mm-hmm. How about the commodity of traders reports? Are you following those at all?
No. The reason why I don't do that is they're lagging. By the time you get those, things have probably changed a lot. All I do, Michael, is I look at the price. I look at the price bar. And if prices are going up, there's more buyers. If prices are going down, there's more sellers. That's all I'm interested in. I don't know who they are. I don't care who they are. I just want to know what prices are doing. The less information that I have, the better I trade. Because if I start thinking about all these other things, it just adds cannon fodder to my brain. And believe me, my old brain doesn't, function as good as it used to. So just looking at the charts themselves gives me the edge that I need. I mean, it's not always a perfect edge, but it is an edge. It's better than 6 out of 10, and that's all I really need to do, to get it, working in my favor.
Okay. The marginal cost of production for oil is around $64 a barrel. Do you foresee that? If we start going down and the U.S. dollar starts skyrocketing, do you see downside targets even into the 50s?
Oh, you could certainly do that. Crude oil, remember in 2009, we got all the way down to $33 a barrel. And, we could easily go back and test 78% of that, and that would take it around $55 to $60 a barrel.
Mm-hmm.
You know what I mean? So you could very easily do that. But, we stopped exactly, and we talked about this on April the 19th, we stopped exactly at the 61% retracement of crude oil at $86 a barrel. We focused on that particular week because it was making a beautiful bullish Gartley pattern. It had the perfect ABCD starting in January through the 19th of April, and that's when it bottomed. And now we had the big rally. We went right back up and tested that line. That the fact that it tested it that quickly tells you that it still has some bullish power left in it. And so my assumption is that we're looking at something that is getting ready to make up its mind, very, very soon.
Mm-hmm. Okay. All right. Thanks a lot.
It's my pleasure, my friend, and I hope everything works out for you up in Toronto. We love that place. Okay, thanks a lot for calling in, Michael. Okay, we're going to go back to, taking a look at the notes and bonds. I posted that chart into the room. And it shows that we made a really nice retracement, a 61% retracement yesterday during the sell-off. We're having a really fast up move now in the bonds and notes. They held that level of the 143 that we talked about in the Treasury bonds. And if we do have this sell-off in the stock market that I see coming, then we'll have to look at that then. Folks, all I can tell you is I've been doing this technical stuff for many, many years. A long time, 6 decades, and I am more nervous now than I was in March of 2009 because of all these reverse point wave patterns that I'm seeing everywhere across the globe, all through Europe, all through the United States. And I know they're telling us they're feeding us rock candy at the fair, but believe me, you can break a tooth on some of that stuff because I think something's wrong here. I don't know what it is. I mean, you see the news come out. I mean, someone told me today the news was really bearish to stocks. Well, how did the stock market doesn't know it? The Dow was up most of the day. So these are the things that make me wonder, whether they're telling us the truth or not. Because The same thing happened in 1980 when Volcker took over. President Carter had Volcker come in as the Federal Reserve Board guy to get interest rates down, and he certainly did. The first thing he did was the interest rates were around 13%, but he had to kill inflation. And the way he did that was he ran interest rates up really high, and it looked like that was going to be the end of the dollar and everything, and that was it. Everything turned, and the way it went, and we've been in a 33-year bull market in interest rates. A bear market in interest rates. They've been going down for 33 years. I think the long bond rate today is under 3%. The mortgage rates are, very, very cheap. A 15-year is like 2.8%. And, there's nobody that I know that I would lend money to at that level. There's just not anyone that I would do that with. The chart that I like to talk about is the really long-term chart on the Treasury bonds, and I wanted to show that because it has the butterfly pattern that is there that I think is something is wrong in Tucson, Arizona, folks, because my computer is not acting properly. I don't know if it's because, it's frozen again. Oh, dear, this is not a good thing. Oh, wow. Well, what am I going to do? Not much I can do, folks. We'll see what happens here. This is frustrating as heck. Oh, one other thing that I wanted to mention that happened today. It's real interesting because I watched these numbers really good. We had a 1.618 expansion today in the Dow Jones Transportation. It went up and hit the 6520 area, which was the long-term 1.618 expansion, and so that was another reason. That these patterns are so big, folks. I don't know what to say. People are asking me how scared I am. I'm pretty scared. I think something really big is getting ready to happen here, and I don't know what it's going to be. I know this is the commodity show, and I put the Dow Jones Transportation Index because they move the goods, across the thing, and those things going crazy too. But nobody's buying copper. I mean, it's up today, a couple of cents, 3 cents, but it's been in a downtrend for well over a year and a half. So who knows? We'll see if it's going to mean anything or not. We've got major divergences there. It's just I'm getting a little scared. That's frankly what it is. And yesterday I was sitting there thinking about all of this, and I got the calls from both of my daughters. They call me several times each week, but not within an hour. And when they both called me within 1 hour, I thought maybe that they had seen something in the obituary column or something, but it really scared me. I said, why are you guys calling me within an hour? Because they live in different cities. One's in San Luis Obispo, California. The other's in Denver. When I got calls within 1 hour, it shook me up a little bit. I went in and checked my pulse, looked in the mirror, and sure enough, I was still there. So, but I'm getting a little nervous. I really am. I know there's a big party going on, and that's it. I want to say I want to tell a story. I think I've told this before. Those of you listening maybe not heard this before, but in March 24th, it was a Saturday. I think it was 22nd or 23rd of March of 2000. I was in San Francisco at the Money Show, and I was one of the featured speakers along with Larry Williams and a bunch of other people. But I had a whole bunch of people in the room. There's about 350 people in the room, and this is the height. The Nasdaq was almost at 5,000, and I had showing these same types of charts that I'm doing now with these patterns that I'm looking at now. And nobody was, they were all chatting and showing their equity runs. Everybody was carrying their equity runs about how much money they were making. And I got up on the table, and I stomped my feet, and I said, you people have no idea. I yelled at the top of my lungs. I said, you people have no idea the danger that you're looking at here. And I went up to the chart, and I said, look, if prices go below the low of 2 weeks ago, let's just go back 2 weeks, and if they go below that, you might be able to, see a lot lower prices. That this could really, really bad. So it's going to be real interesting, to see what really happens here. Because I'm ready to jump up on the table here in Tucson, but frankly, my table won't carry me anymore. and I can't get up there because I'm too old. My little walker will not get me over there fast enough. So this is one of those times where I'm on my soapbox. I don't know when it's going to come. I am not short here yet, but I'm chomping at the bit to get short, and I'm going to go short for sure if we take out the lows of last week, which in the S&P is around 1620. Then I will look to go short. I won't sell the weakness, but I'll sell the rally back at that point. And if I see an intraday pattern that looks really good on an hourly chart, I'll also probably look to go in there. But we'll see the bottom line what it's going to be before we get to the end of this rope. But something's big out there, guys. That's all I can tell you. I've been doing technical analysis for a long time, and I've never seen, I've never seen anything like this. This is very, very scary. That's it. I remember when I was at Drexel in 1980 when Volcker was in, and the T-bill rates were 13% for a one-year T-bill, and you had a California municipal AAA bonds were yielding 16%. That was 16% tax-free. That was a 32% return on your money. And I bought as many as those as I could afford. I think I bought a quarter of one bond or whatever it was. But they were called away in 4 years because interest rates started to collapse, and they've been collapsing ever since. But I'm going to go on a record here on the 16th of May, 2013, and say that I think the Fed has made a bad mistake, and they're trying to figure out how to get out of it. That's what I think. If this was such a good idea, folks, why didn't they do this during 1929, 1940, 1950, 1960, 1970, the crash of 87, the crash of 2000? Why didn't they do it then? Why didn't they do it then? I don't understand if it was such a good deal. So, and I've asked some pretty smart people. They've not been able to answer me. So I don't know what it is. All I'm saying, I'm looking at the charts, and I see something really, really nasty. That's all I can say. Is the Fed manipulating the gold market? I have no idea what they're doing. Believe it or not, Ben Bernanke and I are not on social terms. The only time he calls me is when he has a problem with his computer. He asks me to try to fix it. But other than that, Ben and I don't speak very much at all anymore. In fact, we never did. We live in different circles. He's from academia. I sign the front of my checks. He signs the back of the checks. That's a big difference. I've got skin in the game. He doesn't. He's playing with our money, and I'm playing with my own. So and that in itself is a big difference. A big difference, too. I want to get to the grain markets. But we got a break coming here. I want to talk about the grain markets if I can get my computer working. And right now, it's either if it's trying to work, but I really don't know what's happened here. It just looks very, very suspicious right now. But I'm going to try to get it working and show the corn market, because we've got a big move coming in corn. It's just a question of when it starts. We wanted to do it towards the end of May. We're coming towards the end of May, and this is what we need to be looking at. We'll be looking at the December corn, which is the new crop corn, the stuff that's being in the field, not even in the fields yet, which is actually bullish to corn. We'll take a little break here. We'll get back and talk about the corn market.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and we're talking about the corn right now. I posted into Tiger TV the corn chart. This is for December corn. It's new crop corn, the corn that is trying to be planted right now. The fields are still very wet. But remember, it wasn't until Memorial Day last year that we started the big move that became the drought of 2012. And we haven't ever had back-to-back droughts in our country except for the Dust Bowl years of the, the 1930s, when we had the Dust Bowl years. There's a lot of, we've made great improvements. I don't think you'll see dust, but we might have 2 drought years back-to-back. I wanted to talk about the Canadian dollar because, we have had a really nice pattern that we talked about. It was had a beautiful Gartley pattern forming around the par level, and we've rallied well over 140 pips, to where, it went. Now, I'm going to get back. I just wanted to show the Canadian dollar because this gentleman, Mike, came on from Toronto, and I wanted to show that chart because it's had higher bottoms all along here, and we were looking for that Gartley to finish. Now, getting back to the corn, we're going to have Rich on next, Rich Anderson from Anderson Capital Management next week for sure. But the thing to realize here is we've got December corn selling for about $1.50 a bushel under the price of the July corn. That means that people need July corn right now, and they're bidding $1.50 a bushel more for July corn than December corn because they cannot wait for December corn. So there's strong demand at $1.50 higher than December. Now, stop and think just a little bit. If what happened last year, maybe just to a small amount, and corn becomes in less supply than it was, then what will happen is people will still want that corn, and then the price of the December corn will start to catch up with the price of July. And that's $1.50 right there. That's $7,500, and that's a pretty big move. So that's what we're watching. We're watching to see how this crop, if it does get in. I talked to Dr. Miller last night, and she has 1,000 acres. 60% of it is corn, 40% is beans, and the beans are in now. But the corn is still they're still not able to get it in because it has to be planted deeper, of course. But anyway, that's where we stand, and we've got a couple weeks to do this, and we'll be able to get in it without too much trouble. I think at least that's what it's looking. It's going down. I mean, the problem that we might have is that we might have some serious deflation across the board here, folks. If gold and silver collapse and copper's already collapsed and crude oil collapses and sugar's collapsed, I mean, sugar's broken all support. I mean, this tells me that, we might be looking at some, real serious deflation here, much like what happened in Japan. And, Bernanke can't handle that because, everything he's based on is keeping inflation at 2% and interest rates at 0, which hurts the people that, that have savings accounts that try to live off the interest off the savings account. That's a huge tax on them. We don't see it as a tax, but in fact, that's, what it really is. My assumption, someone asked a question about the bonds. Will we be able to see, maybe 150 in the bonds? Possibly. That's true because we did stop at the 61% retracement on the way down. The notes hit the number exactly, and the notes are 3 times the volume of the Treasury bonds. The bonds went just a little below the 61% retracement, but since have come back strongly. So all of that is telling us that we're pretty close to something really really exciting happening in these markets. The interest rate, I expect volatility coming back in everything, folks. That's that's the bottom line. Okay, that's it, folks. Live every day in an attitude of gratitude, and may God bless, and thanks for putting up with the problems I had.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.